Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Ag markets down, grains leading the charge on Wednesday with the outside markets, crude oil taking a plunge on a possible end to the Iran war. How much lower do you think the grains are going to go here?
Well, earlier in the year, when this first all started with the energy complex, it was the idea that you get oil right, you get a lot of things right. And then that kind of took a backseat here over the last month or so. But it seems like that theme has reemerged where you get oil right, you're probably going to get a lot of other things right. If oil continues to slide sharply lower, that's obviously going to be a big headwind for the grain markets. But I wouldn't be surprised to see the market maybe chew through this headline quicker than we saw earlier in the year and maybe get the grain markets to trading back to their fundamental backdrop and the uncertainties that lie there.
We've also had fast corn planting and, a day when you've got lower soybeans, soybean oil, as well as wheat. It's hard for corn to stay up. I also saw that Brazil second crop safrinha areas, some of them might be going to get some rain. Did that also impact the market at all or not?
Today's pressure that may have played a little bit of a role, but obviously the key driver was the oil complex just
Sure.
taking a little bit of a nosedive, long liquidation against technical resistance. Nothing out of the norm. And kind of looking at the soybean market, we were talking earlier in the week with a lot of clients and in our daily commentary that as a producer, even if you're as bullish as can be, you still need to play defense and be proactive. You can't just sit on your hands and be blindly bullish. You need to, take advantage of higher prices. We're looking at protecting the downside with a lot of clients, more so looking ahead to next week. We've got the WASD report as well as the meeting with President Trump and Xi. And those potentially could be catalysts to spur the market lower. Then on top of that, we kind of touch on the fact that the bean oil market has been a huge tailwind for the soybean market, and a potential profit taking episode there could be a headwind for soybeans. So optimism around, future expectations is something that we've seen in a lot of other markets. You don't have to look too far to see what's going on in the equity complex, whether it could be the S&P, NASDAQ, the Dow, et cetera. Just massive participation from money managers, and potentially they start to look at commodities in a similar fashion here this year. Commodities have been, pretty quiet over the last couple of years, but when you zoom out and look at the historical commodity super cycles, as we like to refer to them as, they really start with the base metals, precious metals, and then flow into energy. And the next shoe to drop would be the agricultural complex. So a lot of that we saw kind of take place at the back half of last year with the big move higher in precious metals, base metals. Obviously this year, energy, and now funds starting to take note of the grain markets.